Hello, everyone, and welcome to the second episode of Personal Finance Night, where we talk about everything related to money, building wealth, investing, and protecting our assets. Like I said in the first episode, the channel is geared towards real estate investing. So, in this episode, we're going to talk about real estate investing, and mainly, we're going to try to answer the question, why is real estate investing amazing? And I say amazing, and I love real estate investing. And here's why. I have that's four, so 7 reasons why I love real estate investing. I put them in 2 or 3 categories. So the first category is related to personality and emotions, I would say. Second one is like the big picture. And lastly, of course, it's money, because that's what we talk about here on this channel. So personality, I like real estate investing because it moves slowly. For example, during Black Monday, and this doesn't happen anymore because we have stops in the system now, but Black Monday, the stock market crashed over 22% in just one day. 22% in one day. Now I think the max is 7% because there are stops. Per day, you cannot have the stock market go down more than 7%. Guess what? How long did it take for the real estate to crash during the financial crisis of 2008? We hit bottom at the end of 2011. So from 2008 to 2011, it's about 3 years. I think that gives us enough time to make calm decisions, to think about what we want to do, to see it coming, to see it happening without incurring too much loss, and then decide whether we want to sell or not. And more importantly, decide whether we want to buy more or not, because that's when you make money, you buy low, okay? So I like that it moves slowly. Second, under the same category of personality, I like to have control over my money and my investments. When I invest in the stock market, and I do love the stock market, I invest in the stock market, but you don't have control. You don't sit on the board. You're not the CEO. You don't decide whether you're investing in this or that and when. Versus when you own a real estate property, a rental property, you are the one who call the shots. You are the one who decides whether you want to buy this specific property or not, and when you want to buy, when you want to deploy your money, whether you want to rehab a property or not, what to rehab, what quality of material you're gonna use for the rehab. You are in the driver's seat. You have full control. So that's number 2. Number 3, and it's a different category, it's like a big picture. Investing in real estate is providing housing solutions. And we are in a market that really needs more decent and affordable housing, so people have decent shelter and decent lives. So you are investing in a noble cause, in my opinion. That's how I look at it. Okay, as long as you do it right, and as long as you are a good ethical landlord. Okay, so that was number 3. Number 4, real estate is one of the oldest industries that humans have created. Before there were houses, our ancestors needed caves. They were in caves. That's real estate. So real estate will always be here. It will never go away. There will be changes. There will be different styles, but we always need shelter. We always need a roof on top of our heads. So that gives me safety. So that was number 4. Now let's talk to what I know you guys are all waiting on this, and it's the financial aspect of real estate investing. And under this category, I have 3 reasons why I really love real estate investing. If you are still watching, that means you probably like the video. So please smash that like button, subscribe, comment, share with friends and family. All right, back to the financial incentives of real estate investing. So there are 3, like I said, and number 1 is cash flow. Cash flow is basically the bottom line of your business, of your rental business. So your rental business has revenue, which is your rent, and it has expenses. The expenses are mainly, the bulk of it is PITI, which are principal, interest. That's your mortgage, principal and interest, and T stands for tax, property tax, and the second I is of the abbreviation is insurance. These are always there, and they are the major expense in any real estate investing business. PITI. So once you deduct that PITI, you are still left with some money, but you need to not forget about repairs and maintenance when you budget for, or you do a pro forma or an analysis to know whether you want to invest in a specific real estate property or not. So you need to add or deduct repairs and maintenance, capital expenditures, and reserves. The reason the last two, I think everybody gets the repairs and maintenance. That's when something breaks and you have to fix it. So that you're going to incur a cost. But capital expenditure is something that you need to budget for the future and it's going to happen. For example, you're going to have to replace a roof. So that's capital expenditure. Reserves, however, are for the unforeseen. You have a vacancy, or, and this is an example I learned, I learned through practice and I learned the hard way. I had in my rental property last year, the furnace was leaking gas, which is very dangerous. So the gas company fortunately detected it, and we decided to, because it's a very old furnace, we decided to not fix it or just replace the furnace. We decided to replace the whole HVAC system, condenser, like the AC, the furnace, the heater, everything. So now we have a heat pump. That cost us over $6,000, and we're here in Southern California. So in other parts of the country, it might be cheaper, but I know we got a very good deal for Southern California because it was at the right time. It's never the right time, but it was the right time to be able to negotiate a good deal with the HVAC company because we were in the fall, so nobody was really working on their HC or their heater. Okay, so the HVAC contractor needed to provide work to his employees, so they gave us a good discount. So that's cash flow. So you have revenue, which is rent, and then you also have expenses that you're gonna deduct from your revenue, and you end up with a hopefully net income. Okay, so that's your cash flow. You receive it every month, and it goes to your bank every month. Real estate investing is great if you do it right and you have a positive cash flow investment. Okay, so that's number one under money category. Number two, it's the appreciation. I prefer cash flow over appreciation, but appreciation is there and it's kind of like a bonus. Do not bank on it. Do not invest because of appreciation. At least I don't do that because I don't want the risk that comes with it. I think it's safer to just have cash flow, and then appreciation is a bonus on top of it's the cherry on top of the cake. And the national average real estate average appreciation is 4%. Okay, you might think it's low, and it looks low, especially when you compare it to the stock market that appreciates around 7% every year, 7 to 10%, call it. So it's lower than the stocks. However, let's not forget about OPM. That's a magical abbreviation and a magical way to increase your appreciation. In fact, OPM stands for other people's money, which means the bank. The technical term is leverage or debt. Okay, so when you buy an investment property, a rental property, usually investors, we do not buy it cash. We buy it via a mortgage, using a mortgage via leverage. Okay, so let's say for easy math, we're buying a 100K property and the appreciation is 4% per year. So the first year we're gonna get $4,000 in appreciation. We're not gonna get it. It's equity that is locked in the property, but we can have access to it, and that's subject to another video. But you're building your equity, so $4,000. However, you did not buy the 100K property cash, right? You used leverage. You probably, let's say, put down 20%. That's 20 grand. And the rest is financed by the bank, 80 grand. Your 20 grand investment has gained you $4,000 in equity, in appreciation per year, every year. So what's the percentage appreciation rate now? It's 4,000 divided by 20,000. That's 20%. That's 20%. Appreciation in real estate is way higher than appreciation in stocks. You make more money in real estate than in stocks, but people focus on, unfortunately, or fortunately for us, so there's less competition, right? People focus on the average price increase. Yes, but you're using leverage. Okay, so 20% appreciation, OPM. So second under money categories. So the first one is cash flow. The second one was OPM and appreciation. And the third one, and we're gonna go fast on the third one, it has different subcategories. It's tax incentives. The number one, and I think most people know about it, and we're gonna talk more about it, it's depreciation. So we're not talking about appreciation. So your property is appreciating in values, but for tax perspective, you're gonna depreciate it. You're gonna say that you're losing money, you're losing value every year. And the IRS allows us, or actually wants us, to depreciate rental properties. If it's a residential property, you depreciate it over 27 and a half years. If it's a commercial property, you depreciate it over 39 years. So what's the depreciation of, let's go back to our example, 100K property. So that's 100K divided by 27.5. We're looking at 3,636 depreciation, $3,636 in depreciation costs every year that you can claim on your tax returns as a deduction. And go back to the first video where we talked about deductions, okay? This is a deduction that a business has. It's not a cash expense. It's not a cash deduction. You didn't pay anybody, but you're claiming this deduction on your tax returns to reduce your income, to reduce your profit and your cash flow. Okay, so you're saying that on top of the PITI, the repairs and maintenance. So sorry, you do not include your principal in when you file your taxes. So on top of the interest, the insurance, the tax, and the maintenance and repairs that you have incurred, and other expenses you might have incurred, like marketing, when you try to market your rental, you are going to add another expense that is depreciation, and that will dramatically reduce your business income, your rental business income. So me, for example, I have a loss, a paper loss. Last year in 2023, I had a paper loss coming from my rental business, but my cash flow is actually positive. I made money, but per the IRS, I did not. I actually had a loss. Yes, I'm not a real estate professional, so I cannot claim it against my W-2, but it's still a loss that I can use in the future. I'm carrying forward. So that's the subcategory 2 under tax incentives. Of course, there are other tax incentives that are more complicated, and so not complicated but sophisticated, like 1031 exchange, where you do not pay capital gains taxes. So when you sell a property, you have to pay capital gain tax on the appreciation. Appreciation is great, right? But you have to pay taxes on it. If you sell your primary residence, you are exempt from paying capital gain taxes on 500K. But if it's an investment property, you have to pay capital gains taxes on every single dollar of capital gains. So there is no exemption. But the tax law provides real estate investors like ourselves an incentive to not pay tax, to defer paying capital gains taxes through what's called 1031 exchanges or like-kind exchange. So this will be, we have to talk about this in depth in another video, but keep that in mind. So there are tax incentives on top of the appreciation and the cash flow that you're getting, okay? Also, there are tax credits. One of them is the low income housing tax credit. And there's Section 8. It's another capital gains tax deferral strategy. It's called Section 8. So there are many ways to lower your taxes, not pay your taxes right now, pay them later, and there are even more sophisticated strategies where you will never have to pay your taxes because you keep on doing the 1031 exchanges, as long as you are doing it right and within the time frames. So these are the 7 reasons why I love real estate investing. If you share my opinion, please let me know. Like the video. If you have different opinions, please submit them in the comments. If you have any feedback, if you have questions, submit them in the comment section below. I would love to get your feedback. I would love to have feedback from you guys on future videos and future topics. What do you want me to talk about? As you know, here we talk about anything related to money. It could be insurance, it could be real estate, it could be other investing. So I'm open to different topics. And thank you for watching. Smash that like button, subscribe, share with friends and family. Let's get more people educated, and I'll talk to you on the next video. Bye now.